Ladies and gentlemen, welcome back. Welcome back. Did we enjoy our weekend? It's been a good one. It's been a good one. I can't lie. I can't lie. Monetization. Turn that on. Turn this on. Good to go. Good to go, baby. Yo, Commander Vlogs. Dan the man. Yo, what is good? Long weekend. Long weekend. It has been very productive. Yes. Yes. I actually went bowling for the first time in a long time. And we had 4 lanes. And I was on like all of them. And over and over again. They're like, you're up on 3, you're up on 2. So I kind of made myself sore, but we're good. We're good. We're here. We're locked and loaded, ready to go. Bright-eyed and bushy-tailed in the morning. It's been good. Lots of opportunity this upcoming week, I feel like. Holder of the shares, a.k.a. Robert Vaughn in the house. David Johnson. Manny Moy. Hey, quick question. In your opinion, is there a possibility that AMC never squeezed Earth is just a sure play, just a matter of win? No, there's in my personal opinion, obviously you'll get a lot of takes on this. There's no way that we don't eventually squeeze. And really the main reason for that is shorts, they're not covering even though they have good gains. And that's usually how it goes, right? If you're in a winning position, it's almost harder to get out of it sometimes, especially if it's a stock that can move a lot and has a history of moving a lot. Same thing for the shorts. They're not getting out. They're increasing their positions. And the only thing that will force them to get out is when they have to get out, when it goes against them in a substantial way. If they were slowly covering or short interest was going down, I could understand that fine, but they're not doing that. So that's a big thing. And then with the squeeze aspect, you can imagine it, and this is exactly how it is. There's a bunch of retail investors. There's institutional investors that a lot of them, believe it or not, don't want to bet against retail. They find that dumb. They find that stupid. They just don't want to do that, right? So a lot of institutional investors know the power of retail. And at the same time, they will bet with retail investors. So when it comes down to it, it's really like hedge funds versus hedge funds. The best performing hedge funds of 2021 actually traded the retail stocks, traded the same stocks we did. So there's that aspect to it. So they kind of go back and forth. But in that regard, AMC was searched more than stimulus check in 2021. And I know everybody knew people that constantly, every day, were searching about a damn stimulus check. To put that into reference, everybody knows about AMC. It's not even like a Mullen or a BBIG. Somebody might be like, huh? What's that, right? I've never heard about that. People know AMC. People know GameStop. They know what can happen. And when it starts to actually break key levels, get that volume, you're going to see a lot of bullishness for the share price. And one thing that I'm paying very close attention to is I want to see what happens, because let me show you guys. We've seen this volume come in, and now we see it coming down. Do we hold up higher than where we were at before this volume started? So really, do we hold up above about 1850? That's what I want to see, because the volume will come back. It always does with a stock like AMC with a high potential runner. It will always come back. So that's the question is, does it hold up a little higher and then we make that next move to the upside? And I think the answer is yes to that. But, time will tell as far as that's concerned. The catalysts are going to be the main drivers of the share price, like AMC investing in other businesses, Good earnings, believe it or not, that will matter in 2022 a lot. Earnings at companies, that will be huge. So all of that, makes me bullish on it, on the situation. As well as that, even look at the option activity for last week. Like like this solidified, this move really helped to solidify what I've been saying, but also my own conviction, right? I've always had that conviction, but you're seeing institutional investors that are trading AMC stock to the bullish side. Positive order value of 75%, 733 orders totaling $944.8 million. That's not retail investors. That's not retail money. That is institutional investors. These are large option trades. And look at the expirations. There was some April 1st. There was quite a bit of April 1st activity, but April 8th and April 14th have a lot of option activity as well. Some of the longer dated options that are like the $3 strikes, the $5 strikes, the $10 strikes, $20 strikes, those have a lot of activity as well for 2023 and some for 2024. But a lot of the call activity is April 8th and April 14th. So I do expect some kind of bullishness in between now and then. But we got to remember the broad markets. AMC is a part of the broad markets, and we have big catalysts coming this week. I'm not particularly bullish on this week in general. Not anything to do with AMC, but the catalyst and the market bounce that we have seen. It'll be interesting to see if we do get a move back down, if AMC does come back down as much as well, because you kind of seen the quote unquote retail stocks take the first move down. So like with AMC or GameStop or some other stocks, SoFi, some stocks I'm personally invested in, right? They've started to come down much more aggressively than say the S&P 500. Well, maybe they are leading the S&P 500. So once the S&P comes down, maybe those retail stocks really start to chill out a little bit and they don't fall as much. Then when you get that ultimate rebound, they'll go up higher. Who knows exactly? As recession fears continue to grow and more people start to talk about that, you will see growth stocks start to do better, because believe it or not, growth stocks outperform during recessions by quite a huge margin. And AMC falls in that. Gap up in the morning. It's possible. I mean, we have lots of catalysts this week. We'll talk about the other ones, but there's more talks between Russia and Ukraine that are supposed to happen tomorrow. You're getting like genocide shit coming out of Ukraine, so who knows if that kind of downplays the reality of a ceasefire or something. Specifically with AMC, I mean, there's no real catalyst to cause a gap up, not that I have heard about. There's no new investment or anything like that, but it is possible. It's just where the market feels like they want to put their money until we do get a catalyst, which is going to be Wednesday. Wednesday is the big catalyst, and that is the Fed minutes, which I'm not so bullish on the Fed minutes, mostly because of what Fed Williams said on Saturday. He said that they might start running off the balance sheet and selling assets pretty much by the end of this month, by next month. And that's what really is going to cause the markets to collapse. Balance sheet and stock market, I mean, they're friends when things are good, but they are bitter enemies when things are bad. Like, just so you guys are aware, if you didn't watch the video earlier, this was the only time we ran off the balance sheet and started to really sell assets in a meaningful way. This was 2018, 2019. This lasted from October, and then the bottom was December 24th. So it was only a couple month time frame. by the time you got back to all-time highs, October to about April. So it was about a 6-month down period for the markets. But it was this. And that was the Fed running off, assets off their balance sheet. And then they ultimately cut rates because they realized they did too much too fast. But where's the balance sheet? Yeah, this is the balance sheet. So like pre-08, didn't really have anything on there. $800 billion. Now it's at $9 trillion. So it's 10 times larger now. But do you notice we haven't really ever come down in the balance sheet in a meaningful way besides right here? That's 2018, 2019. That's the whole crash situation. And markets were not very happy. So you talk about balance sheet. The only reference for history we have to look at was a 25% drawdown in the S&P 500. So that's what I'm not feeling so comfortable about. And the fact the markets have bounced up so much in such a short amount of time, this was historical. I mean, this was very historical. So I think it's kind of pricing in a lot of good news kind of too fast. But if something else happens, I mean, we could be good. But on a positive note, the 2 and 10-year yield curve did invert. And I believe it's still inverted. These charts lag behind quite a bit. No, it's inverted. April 1st, Friday, 0.06% inverted. That means a recession is coming in the next year to 2 years. Now you might say, why is that a good thing? Well, it's a good thing because the average return of the S&P 500 within, the last 4 recessions and the yield curve inverting was about 25% before the recession. So it's kind of like this is boom time. So buy stocks now, buy assets now, and then deal with a recession and try to get out then when it happens. So history shows us that inverted yield curves make for some pretty sweet gains in the short term. So dollars, will that affect the market? Not really, unless Russia, unless the companies don't pay, obviously, for the gas in rubles, and we'll have to wait and see on that. That would definitely affect the markets because it would, the longer commodity prices stay up, the higher likelihood of a recession, and the longer they stay up, the worse the recession will likely be. Like if we go into a recession now, I mean, what if we gain like 5% GDP in the last 2 years? If we lose 1%, if we have 2 quarters or 3-4 quarters of, let's say, declining 0.25% growth, whole recession, we lose 1%, not bad. You're still up a lot. But if commodities are really high, economic activity really slows down and you lose, say, 2, 3, 4% GDP, not going to be good. And the longer those stay up, the worse it'll be for the market. So if Germany, other places really don't pay for their energy in rubles and you start to see those prices go up a lot, higher inflation, hawkish Fed, greater chance of a recession. Those 3 things, not good for the markets. Could be for the short term once that initial fear reaction, but still not good. What's your opinion on buying leaps for AMC? And yes, click on the like button for the free 99 golden nuggets. Oh yeah. Better than McDonald's. Buying leaps for AMC. I mean, they're just expensive. My, kind of what I think is a good strategy on AMC, like the good days, the stock usually starts low, say, the last couple big days we've had, those 45% gainers. If you bought in the morning, if you bought options in the morning, you captured most of the day's gains and you didn't need to hold them overnight and lose money before then, right? So the way I look at AMC and the way I personally want to trade it when the MOS actually does happen is likely buy like 5 to 10 options that expire 2 to 4 weeks out. When you get those big running days, when the market looks good, the technicals look good, there's a news catalyst, something that is fundamentally there to sustain a move. that's when I would probably go in with 5 or 10 contracts, look to maybe sell out half of them and keep the other half free. Even, buying 10 contracts, sold out 5, got your initial investment back, you hold 5 for free. Those 5 will put in some huge work for you once you get the MOAS. Like, you don't have to have 10 risk all of your money, essentially. You don't need to do that. Just leaps are very expensive. Premiums are high on AMC. It is no joke. So I'm not a huge fan of it just because you could probably get a better price on a buying in the morning on a really strong day, if that makes sense. Tickle that like pickle. Yes, tickle the like pickle. When do you think is the next leg up? Probably when the markets, when the next catalyst comes. That's a given, but I don't know when that will be. Without a catalyst, without something, fundamentally changing, then it'll probably be once the markets really start to price in a recession, and once you start to see people switch to more growth stocks, right? AMC, they're still going to be growing at like 100% this upcoming year, or more than that, right? So there's going to be a lot of people looking at it in that aspect, and the more AMC does, the more investments they do, diversifying different income streams, the higher multiple AMC will receive. But the real gap up, the 40%, 50, 100% day, that's going to come off a catalyst, and that's hard to say. AMC did put out that they were looking at 6 different investments worth as much as $500 million. So that could be here shortly, but I believe in long term. If we hold long, we'll do good. Yeah, that's really the safest way to play it, Just buy and hold. I mean, and that's all good. But I also trade the markets too. I don't just own AMC, so it's hard for me to kind of just say that. If all you have is AMC, I see why people are, want that next move quickly, but the best thing to do is buy, hold, and not really worry about it too much, in my personal opinion. I know short or shorter calls are good position as sometimes, but right now I'm looking to the HYMC. Going to go in long for the long term. You cannot go wrong if you follow Adam Aarons. The man is very smart. He knows what he's doing, and I will back him 100%. Yeah, I believe so too. I mean, he had to do what he had to do. People give him shit for selling stock. He's 67. The average male lifespan is like 65 or 75. Yeah, give him some slack here. That's how I look at that, but I don't really think there's anything to complain about necessarily. Like, I know a lot of different CEOs that don't do a good job. But, if you're in the options trading, it's very risky. Yeah. Just got to have strategies and stop losses. If you have a maximum amount of money you're willing to lose, say $20, 50, 100, depending on your conviction, depending on what the setup actually is. I don't want to say it's hard to lose, but if you're following the same strategy and you're not taking huge losses, which I shouldn't say this because I'm like, I probably hit like 2 or 3 trades out of 5, but the trades I hit are multi 100% gainers most of the time. So it well makes up for the bad ones. But I even need to work on that, putting on stop losses sooner. But lately, they just have not been getting filled. I'll put on a stop loss, and it'll go straight under that. I'm like, what the hell? Oh, 62, that's great things that happen. Nah, you're good. Any news on Citadel investigation? I haven't heard anything else on it, which it makes sense because that's not really something they want to come out and say to everybody. That's what the SEC really wants to do, is not undermine the markets. They don't want to say, hey, there's been somebody that is making themselves rich, manipulating all of your orders and for their own gain. To say that to global investors is not the greatest. Like China or Russia, there's a lot more manipulation that goes on over there. Like America wants to stay on the good side of things for the world stage, and to be honest and say, hey, they were doing that, it doesn't sound very reputable, I guess you could say. But eventually we will get some news on that, probably when people are not really paying attention to it. I would give it a couple more months and then we'll slowly start to hear, what was going on. CEO of my company laid off like half the company when COVID hit. They gave himself a $12 million bonus because the stock price recovered. What company do you work at? Lots of businesses did that too. Retail deserves the truth. 100%. 100%. Yeah, you would think they would not let that shit happen anymore, but Baker, and they're going to the end. We need to crush Citadel. Yeah, they will they will in due time. I mean, everything. That's like if you're I'm going to use this reference, but like a drug dealer, right? Everything goes good until it doesn't. And that's kind of what Citadel, what situation they are in. Mexico used these products being made by China selling in Mexico. There's something wrong. Yeah, and what's funny? I'm glad you said that too, because what Russia invading Ukraine has really done, it's changed the world as far as globalism, right? Instead of depending on all these different countries to make shit for us, or themselves, they're all countries, they're kind of starting to come together for themselves, if that makes sense. Like, we're trying to bring chip production back to America. I mean, they should get into oil and energy production more, but that's obviously not happening. So there's going to be individual winners right there. Halliburton. I understand laying off people in tough times, but then rewards yourself. Yeah, it doesn't make a whole lot of sense, huh? Ken Griffin Escobar. Yeah, that's basically it. Ken Griffin Escobar. Yeah, I seen that comment. I'm like, what? I don't know what to say to that, my friend. What do you think about the U.S. closing down all the Chinese stocks? I think it's only a matter of time, honestly. That's why they did gap up on a Friday, though, is because China had basically changed their rules to let regulators audit their financials. It's not quite 100% there, but it's going in the right direction. I think in the end, if we're talking 20 years from now, it's a ticking time bomb, but there's definitely money to be made with those stocks as cheap as they are. So glad I got out of Neo. Yeah, me too. Neo was great business, but I actually got some calls on them that I'm still in, but I should have probably sold out of them when the stock was up 10% Friday, but you know, we'll see what they do. What is up, Michael? Close them down because they know they're going to default. Yeah, the Chinese economy too is not looking so good right now. Not at all. I actually want to see what's Neo short interest. Only 6%. Interesting. $50%. Positive order value, put to call ratio is definitely went down. This is a good tool you guys can use to from CBOE, and you can look at the option activity for any given day. It's good stuff. It's good stuff. I like to look at the equity options. Sadie. And you could see for Friday, Sadie. Yeah, for equity options, about 1.5 million for volume on the call side. I believe this might be in thousands, so that might be billion, 1.5 billion. And this is 912,000 for the put side. So a lot of option activity is driving this move, as well as some short-term shorts that we're covering in the markets. I think it's really a bear market rally, but we're gonna be range bound. But it's a good tool to show you if the sentiment starts to change. And it does it on any given day. You can go look, like, what, March 14th was the low for the markets, the recent low. Payday, my favorite, Cookie says. BitNile. Yeah, cheap premiums on a BitNile. Yeah, and then for like index options on that low and exchange traded products, you were seeing a lot of hedging, more puts than calls. Pretty good ratio. Good tool to use. Oh. Neo will leave China before they let their government ruin them. I mean, the problem with Neo is they're 40% owned by China, by the Chinese government. That's Neo's problem. Like, I don't think the government would let them. Hoping for the next leg up this upcoming week. That would be nice. That'd be a nice shift, especially if we get the next leg up over 30 and can hold that. That's going to be solid. VLNS. Is this right? It says short interest 5.68%. Cost to borrow max 32.31%. Utilization 100%. And days to cover at 34.65. What the hell? Wow. That's wild. 34 days to cover. Shoo. Yikes. I listen to you, Tyler. I do my own investigations, then I respond to you about what I think. Always welcome. Always welcome. Come on, guys and gals, smash the like. That's what I'm talking about. Give giant hugs to Ling Ling and Jing Jing. Ling Ling. Oh, my Ling Ling. She's so cute. She was at the bowling alley too. Oh, let me tell you. They have those what are they, like rails that let the ball go down? She was on it. She was on it. Let me tell you, this kid loves bowling. She was pushing it off the top. She actually did good too. Catalyst for the week. That big one, the FOMC minutes. And that's basically like a readout from the Fed, like what they were saying. It's kind of like, imagine when Biden has like phone calls with China and stuff like that. They give their readout of kind of what was said during that call. Not everything, obviously, but a decent amount of it. And that's basically what you get on Wednesday, is the readout from the Fed, their last meeting. And it's going to give us more clarity to the balance sheet, raising rates. But really, the balance sheet is going to be the most important thing. And then on Thursday, you have a bunch of Fed speakers. Fed Bostic, Fed Evans, Fed Williams twice, and Fed Bullard. And that's the guy that Fed Williams came out Saturday and said they're going to have to start running off the balance sheet and selling assets by next month. Let's pull it up. Yeah. New York Fed Williams says could soon begin trimming balance sheet as soon as May. Not good. Not good. Federal Reserve may begin trimming its balance sheet as soon as this May 3rd through 4th meeting to address inflation risk, according to the New York Fed Chair John Williams. And that's not good. It's like markets, they know what to expect when the Fed says they're going to raise rates 9 or 10 times in a year. Cool. Sucks, but we know what to expect. You're talking about getting rid of trillions of dollars, and flooding those bonds back onto the markets. You're going to jack up interest rates like crazy. I mean, that's what really controls like your mortgage rates and auto loans, even somewhat credit cards, things like that, because it's a competing asset. So that really starts to strain the economy for getting more loans. Like if you want to start a business and you need to get a business loan, when the Fed's selling their bonds and driving those rates up, even if they don't raise rates as much, your rates are going up a lot, because the bond yields are going up. So that's going to be a big catalyst. And I don't really think, looking at the chart here, I don't think the markets are pricing in the Fed reducing its balance sheet as soon as next month. Does not look like that as far as the chart. So, I will be looking at some positions. One that I will say that I'm looking at right now that I have been doing a little bit of digging into, specifically, is Apple, and how they moved last week is kind of telling in my personal opinion. So I really like the April 14th $22 puts. Obviously, if I went bigger on this, I would have a stop loss on, because I'm not going to lose all my money betting against Apple. Usually not a smart thing to do, but there's real weakness in the stock. There's real weakness, and considering that China is like 20% of Apple's revenue, they are shutting down. Their factories have been shutting down, and Apple's starting to do all these different subscription initiatives. It's kind of showing you that their sales are slowing down if they're trying to stabilize their revenue. But you could see Apple down 0.17% and down 0.18% on Friday. What'd the S&P do? Up 0.28% and up 0.08% in after hours. There's a real weakness there with Apple, and Apple has ran up a lot comparatively to where it was. So to see it come back down to my price that I would want it to come down to, 167.50, those are probably the options that I would look to go with. Not too unreasonable there. About $100 a piece. I'll probably put a stop at like 90 or 95 though. So, if I was wrong, I wouldn't get clapped. But April 14th, that covers the Fed minutes. It also covers CPI April 12th, if I, for whatever reason, did not get stopped out of that position or did hold on to it. So 2 big potential fear catalysts covered by that. And I just think Apple's in a pretty weak and vulnerable spot right now. So I think that's going to be a good one. But what's your opinion on Lucid? I like Lucid. I do. But it's not one that I'm very excited about right now because they cut guidance like 40%. I get it, chip supply shortage, and something like Tesla, they're not affected. Their delivery numbers have not been affected by this. So it's one of those things where they have a lot to prove to investors if they're going to hold up a $40 billion valuation with not meeting their own expectations. So it's one of those things where if you hold long term, I think you'll do just fine, and I think you'll be happy you did. But there's going to be some pain for years to come. Years to come. Like a $40 billion valuation, last I checked, that's what they were at. Maybe it's less than that. Maybe it's like $35 billion or something. But if they can't prove to investors that they are worth a multiple that is kind of insane, to be honest, $40 billion delivering 12 to 14,000 vehicles in this whole year. It's a steep valuation. They have a lot to prove. So they're going to really have to start kicking it up a notch or, just start sandbagging shit. Just sandbag your numbers. That means underestimating. Like if they think they're going to produce 12,000 vehicles, they should have said 8,000. Just fucking sandbag it so you can, under promise and over deliver. So at least you'll have something to say, hey, we beat estimates. But if they're going to go in with super high numbers and come in and guide down, and then they're going to struggle to meet those numbers, it's going to be all fucked up for a long time. So, one of those things. I do like it, though, for the long term. But that scaling up process is going to be brutal. Brutal. And I know Vlog loves himself some Lucid. So, I didn't want to go there, but it's something I've been thinking about. Like, I'm very disappointed. Like a 40% guidance drop, that's wild. That shouldn't have happened. Tesla is beating all of their expectations. Shouldn't have happened. And they've been getting looked into by the SEC, but all these SPAC companies, Lucid, even as far as SEC investigations are concerned, like the SEC is starting to go after SPACs that overpromised and basically had no course to get to where they were saying. Like Lucid might fall under that category, especially after guiding so low. Very disappointing. So I'm going to watch them for a couple quarters, but I'm still positive on my investment in Lucid, but I think I got in like 21.70 and bought in pretty big. That was only in September. It doubled on me, and I probably, hindsight, should have took some profits, but nonetheless, it's good. It's good. Yeah, but I don't think, I don't really, it's tough. It's tough. Like Lucid can move in the short term too, but you're not going back to all-time highs this year and probably not next year as well. So it's a multi-year commitment if you're buying Lucid to get back to all-time highs. I want to see. Hopefully they can put something good up. But yeah, we actually did close above the 100-day moving average on the SPY on Friday. Look at that. If we break under that, what's the next stop? 444. Jeez, and we were just there last week. That's kind of crazy. 2 weeks ago. Everything's holding pretty steady though. Nasdaq down 0.25%, S&P down 0.14%, Dow down about 0.13%. Oil's down as well, which you would think it would be up. But still enough to cover everything, take a little profit, and then take the rest of your shares for free. Yeah, that's a strategy that I really like to do. Or do it with options. Like I bought Mullen, and then the options went up so much too that I was able to sell some options and make my initial investment back that way without selling any stock. So come July, if Mullen is under $5, I'll make 100% profit and get to keep all my shares. So that's a really good strategy too. But SPY going down to 420. I hope 420. Yeah, that would be I mean that's going to be an important level. We really fought hard around 420. And then 400, there was so much demand under 410. We just shot straight back up to over 420 or around 420. Yeah, like 415, but the markets are not expecting this whole balance sheet situation. So I hope the markets are green tomorrow so I don't end up paying a lot for these options. But I've been bearish on the markets. Like, I expected a rally. Like, I would have been content. Like, I would have said, hey, that was justifiable if the markets, the Fed day, right, March 14th, where we got this rebound right after, it would have been decent, or March 15th, whatever day it was, to say, hey, we were at 415, 420 range. Cool. We went back up to 440 and then traded sideways. Like, that would have been justified, but we ran all the way up to 460s. No way. You're selling financial advice without a license and you are clueless about options trading. I don't think you know what you are talking about, sir. I think you are a new guy in the markets. And I think you are mad about something. So thank you. I've also never seen you at an AMC investors meeting. What? You are little brains, huh? Do you got a little brain, bro? Nobody time him out, because I want to have this conversation, because he obviously has no idea what he's talking about. So please, nobody time him out. Nobody time him out. You are not new. You are not new. Okay, what was the first stock you bought and when? Oh, he did it. He did it. It's all right. He'll be back. He'll be back. You're good. You're good. Little brains. I mean, I didn't want to go there, but I mean, like, right before you said it, no, you're good. Said I let him back. No, tell me, how do you like to trade options? What do you do? What do you do? What's your strategy? First stock was in Australia when it went public. Nice. But what's your strategy? Let me in. Let me in. If you got the juice, if you got the sauce, if you got the secret recipe like it sounds like you do, let us in on the strategy. Buy high, sell low. Exactly. That's the key. Like spread the knowledge, dude. Google the date if you have to. No, I don't really care that much. But what's the strategy? I'm not selling strategies and I never claim to have a secret. Fair enough. We don't sell strategies either. We sell financial education for free 99. How about that? Isn't that crazy? Isn't that crazy? I mean, if you want me to sell it though, I got you. I got you. Yeah, codes to release the MOAS. Like, yes. I was going to say like the nuclear codes, but instead they bring profits to your portfolio. But nonetheless, we're working on it. We're working on it. Back to the blender as ass goes. People like that though, like, you know, on a real note, let me get philosophical with you guys. Those are, you know, people like little brains. If you bash people without having any knowledge or information yourself or providing any value, or have this sinister attitude towards trading, investing, or anybody else for really any reason, you're not going to do well. You know, that's like obviously little brains. He's mad about something. He's mad about something. He's not mad at me. I did nothing to him. He lost on a trade, and he's in here complaining. Like, none of my strategies have ever, if anything, they've made people money. We bought Mullen at 70 cents because of Super Show, right? But I was very transparent on these live streams with everybody. That's up 350% in the past 2 weeks. You know, we've hit a lot of trades. I don't need to explain myself in that aspect, but, you know, point is, don't be like little brains. Don't have that, you know, I fucked up. I'm gonna go take it out on somebody or talk shit about something just because it makes me feel better. You will never make any substantial wealth by doing that. You don't see Elon doing that. You don't see Jeff Bezos doing that. You don't see Buffett doing that. You don't see Oprah or anybody else that's a billionaire doing that, or anybody that's successful. I don't know one successful person that is worth a lot of money that was either too hard on themselves, too with that attitude like I can't do this, or somebody else did something wrong and they're selling financial advice. I always say you will probably lose money if you listen to anything I say. I don't say everyone go out on Monday and buy these options or you're going to miss out on the best trade of your lifetime. I never say that. I even when it comes down to AMC, like I just said, I just said that if you're buying options in AMC, leaps, they're too expensive. Don't buy those. You know. So you want my strategies, but you won't give me a ticket stub from... I don't have a ticket stub. I didn't go get the NFT. I could care less. I'm here to make money. Work for a large firm. You should probably look me up. We'll be taking this further because what you are doing is illegal. Oh, so you're a hedge fund. Oh, that fucking makes sense. But no, it's not. What? Okay, check it out. What is more illegal than talking about option strategies or what the catalysts are in the markets than, say, Bill Ackman going on CNBC and saying, hey, the fucking economy is going to zero, sell everything now while I have $1 billion of puts on the market. If you can't convict them, you will never convict any YouTuber on YouTube saying anything, even if they are flat out wrong. You know, It don't work like that. So I know that was a little brain thing to say. Sounds like you're like 12, so it's okay. We get it. I have context in the SEC. Okay, I don't do it. I don't care. I don't care. Dude. Okay. You're funny. You are fun. This is so comical. Arrogant teenager, and yet you want to claim to have financial knowledge. You came in here throwing around saying what I am doing is illegal. I ain't even mad. But like if I was mad, like I mean, but you behaving like This is funny. This is actually funny. What firm do you work for? Because I'm going to tell them that you're wasting your time in chat rooms and they're going to laugh at you. You're going to be the joke at the office if that's the case. So please. You follow yourself trying to fool others into giving you money. Dude. I will admit, some people in this community, and I'm very open with this, don't know shit about what they're talking about. But you've obviously never watched a video of mine or anything to be in here making claims. Oh, I tell people. What do you mean? You're going to help people get ahead. I tell people I am a long-term investor. That's what I do. You should not trade anything I say. Nothing is a guarantee. I say you will probably lose money. Like, there's a better chance than not of you losing money. About 83% of options expire worthless. Do not trade them. That's very obvious. You don't have to be very smart to know that, right? Like, you don't have to be very smart to know options expire worthless. And if you trade options, that's your full understanding of your own risk. It is for 3 months now. Okay. Well, then you would know if you've been watching for 3 months. I never say buy this or this is guaranteed going to happen. I say, go watch the video from earlier. I said my price prediction was in between $26 and $30 by the end of this week. I said there's a chance we fall back down, and I want to see what levels we hold up at. I did not say there is no way we are not going to fall. I did not say buy this asset by this expiration. That's not the case. Just be somebody who learned about options from a YouTube video and finds it trendy to talk about. I've made people lots of money before, dude. Made people lots of money before. I really don't need to prove anything. That's hilarious. Cheers. Yeah, that guy's clueless. But how's everyone else doing? What are you guys looking forward to this week? Back in the blender. Yeah, I thought he was gonna be chilling. Dude, he asked me for a ticket stub. Please, never be the guy that asks for a damn ticket stub and then goes off in a chat room, please. That was a little bit crazy. That was a little wild, honestly. But yeah, what are you guys looking forward to? What do you think is going to happen with the FOMC minutes? Do you think the markets have priced in bad news or not coming into that. Because let me just give out a golden nugget here. It doesn't really matter what it actually is, how good it is or how bad it is, any catalyst heading into it. It really matters if the markets have priced it in or not. Like black swan events. That's why they're so bad and they can be so violent, just full-on crashes like COVID. Nobody expected that to happen, so the markets reacted very aggressively to that, to the downside, right? If you're heading into a big catalyst like we are this week, the one thing that you guys should do, not financial advice, is think, have the markets priced in what is likely to happen at that catalyst. Like, do you think the markets have priced in the Fed reducing its balance sheet by next month? And that's an honest question to you guys. It doesn't look like it to me. So that's where I get this whole bearish tone to it. But at the same time, if you don't hear anything about the Fed balance sheet, you could actually rally off of that. But yeah, that's just yeah, like with the Mullen, I thought there was an opportunity there. I was very like, go watch the Mullen video. Go watch the first Mullen video that I made. Kind of hilarious. I said this thing is either going to do very well or it's going to zero. Or it's a big fraud and it's all basically like a pump and dump. Like it's done. It had its time came and went, and it's going to zero. Like, do not put anything in there you are not willing to completely lose all of your money. Like, that's the way you got to approach some of these. Or all of them. All of them. I remember it. Yeah. And that's how I like to look at stocks, to be very skeptical. Like you always got to have your worst case, base case, and best case scenario. Like with AMC, that's what I even do, and that's the lens that I like to look at it. Like, what's your base case scenario? Well, if you're in a market environment that is pretty neutral, it's not overly bearish, it's not overly excited, it's kind of just not doing too much. Like, you're in a normal cycle. The Fed isn't raising rates. The Fed's not reducing its balance sheet, or it's not adding to its balance sheet. They're not giving out stimulus checks. There's not really much going on. Then what's that fundamental valuation of AMC? And that's where you can all come to your own conclusions, do your own math on that, right? But I would argue it's a range in between $17, $18 to as high as $30, depending on what the business does. That's really like your base case scenario. Your worst case scenario, markets freak out and they panic, and the stock goes down to $6, $7 during a market crash, right? If the markets do a COVID again, that thing's heading way down, way quick. Is that likely to happen? No, that's why it's your worst case scenario. Your base case scenario is more likely, not considering any short squeeze, and then your best case scenario could be hundreds or thousands of dollars. So that's the way you have to look at all of these stocks. Like even Mullen, that's a risk assessment there. Like, hey, it's $35 million market cap. It's an EV company. They're supposed to be delivering vehicles here soon. Maybe the markets have forgotten about it. Maybe they just don't care about it. There's obviously some kind of fundamental issue here. They have to raise capital. Something is going on. Or it's all a fraud and it's going to zero. That's why you can't put your whole portfolio into stocks like that. But if it makes sense, you can kind of take some of those risks. But just broad, not financial advice. If you make $1 million, I think it's a good idea to get a diversified dividend portfolio that pays you 3 to 4% per year, and you can sit on your ass for $30,000 to $40,000 a year. I think that is very sound practice for anybody involved, and that's what financial advisors do. That's what my grandma has right now, and she got a financial advisor. You know, things like that. It doesn't take a genius to know good and bad not things to listen to, but things to know, right? If somebody's telling you to YOLO everything into weekly SPY options, calls or puts that are super far out the money, probably a bad idea. You know, that's why everybody should paper trade before they trade options, or even invest in the stock market. You know. Tyler Brandy said good night. She has to sleep so she can get up in the AM for work so I can play in the stock market. Yes. Good night, Brandy. That's good. So I can play in the stock market. I like that. $100 YOLO. Yeah, that's the best way to look at it. And you'll hit some very nice trades like that. I mean, $100 at the right time can make thousands. Your worst case scenario is defined, and that's the thing either. Like, I don't like to go into any trades that are not risk defined. Like, if I put $500 into an option trade, I know my worst case scenario is I lose $500. It sucks, whatever. That's your worst case scenario. That's why I'm starting to put more stops on things, just to, you know, not kind of take those losses. But that's why I also get time. Like, I got Apple debit spreads that are down like 60%. But I think we're going to go back down to those ranges by June, right? So, you know, kind of trading like that is what has done me very well. But I probably should have took profits on that a while ago. It's on NDK. I don't know anything about that, honestly. Oh, is that? Oh, NOK. Is that Nokia? No. What's Nokia's ticker? I don't know if this is the right one. Doesn't look like it, no. Is it Nokia you're getting to? See, I'm not a big fan of you know, for a trade it might be a little bit different, but I don't know enough about it, honestly. Besides like the legacy business, but Express. Express. Sister brand opposite retail in all the stores in the United States and Puerto Rico. It sounds familiar, but I don't know exactly. Geez, $226 million market cap. Jesus Christ, what is happening with it? I mean, for the price it's at, you know, like Bill Ackman says, that the most money he's ever made is in companies that were not doing well, that had very pessimistic outlooks to it. And that's what it looks like is going on with Express here. So, you know, I wouldn't like risk the whole portfolio in it, but, you know, to allocate a couple percent to it, you know, could do well. Like, not something I would directly do necessarily unless I did a lot of due diligence into it and found out why it's down so much in the last 5 years, because I simply don't know. But, for an example, you put 1% of your portfolio into a stock, it 10x's, that's 10% of your portfolio. That's a pretty damn good return. You only risked 1% of your portfolio, and in reality, if it goes down 50%, you lost 0.5% of your portfolio. It's not great, but it's not going to break the bank, right? So you kind of got to look at it like that. If this thing 10x'd, you'd go to about a $1 billion market cap. It's got 10,000 employees, and it runs retail stores. So it's possible that it could 10x, and well, as far as market cap is concerned. But, I would just figure out what the issue is there, because there's obviously some kind of fundamental issue that is going on with the business. Might be there's too much debt or all that, but, when it's like this, I would either just look at it for the long term, me personally, or if you were someone that does trade options, buying something with like a 2024 expiration, it's going to be a lot better than trying to time like a weekly move on it. It'll offer you somewhat the same kind of gains on the upside if it does move a lot. But I mean, $3.34, it's almost worth just buying the shares, in my personal opinion. $226 million market cap, that's crazy. I'm going to actually add that one to the list. Just throw it in recovery. And we'll see. What's the futures doing? Yeah, pretty steady. We have those negotiations tomorrow between Russia and Ukraine. Doesn't look very likely anything will come out of that. Not going to, be too crazy. But once that does actually come to an end, it should be pretty good. And it should be a bullish thing for the markets. But at the same time, I've been trying to think to myself, we know this rally that we have seen is a lot of shorts covering, lots of FOMO, and people realizing, hey, the situation isn't as bad as we thought it was. Maybe the markets shouldn't be beaten down so much. But is this rally starting to price in the war in Ukraine coming to an end here in the near-term future? It looks like yes. And if that is the case, if the markets have priced that in to a certain extent, the move to the upside won't be as big, right? Like down here, if we would have got an end to the war, or whenever it started, I believe, wasn't it down here? The markets probably would have shot up to these prices where we are at right now pretty damn quickly too. But I really don't think the markets are pricing in the Fed getting rid of its balance sheet this week or this next month. So, interesting. They were part of the meme stocks that got held in January of 2021. Yeah, I mean, I knew that far, but it's when it's something like, I mean, you're talking about meme stocks here. You're talking about the next big runner. They're all gonna move the same. If you're trying to go for a big runner here, then you're gonna take that risk of losing all of your money, and probably not a good idea that I call out certain options, because I mean, you sound like you would just YOLO your money into a monthly option. I mean, you're giving me shit because I didn't acknowledge that it was a runner in 2021. I get that. That's very true, but it could be a while. Or the stock may never run. Nokia, none of those might ever run. It could be just AMC and GameStop like we have been seeing. But, for a $226 million market cap, it's like, why even try to get into that until there is bullish momentum? You don't want to get into a stock that is just going down that has a bad fundamental business. Like I said, you got to have your best case, worst case, and base case scenario. If the business is destined for bankruptcy, then you're going to be fucked either way it goes. You're going to lose money. And I can't really put an opinion on something like that unless I kind of know something about the fundamentals, because it looks like the thing's going to go out of business here pretty damn shortly. AMC, GameStop, they're not quite at that level. It's not like your worst case scenario is bankruptcy right now. So that's where it just becomes hard. But I mean, if you don't find the value, I don't know why you're here either. But to be honest. But it's not my favorite potential runner, let's put it that way. Much better ones. It's only got 6% short interest and a 1.47% cost to borrow and a 5% utilization and a 0.37 days to cover. The thing's not doing so hot. And you got to have that base, best, and worst case scenario to even talk about a potential running trade unless it's a day trade. If the stock's up, there's news, day trades can work very well, but I wouldn't be the one to swing trade it for days when it's a business that is destined for bankruptcy, And if you do, then you're taking that risk of fully losing all of your money. And I know a lot of people put way too much money into quick, short-term trades. It's not pricing the balance sheet in. What do you mean by that? So great. Glad you asked that, because this totally changed the game for me in my trading ventures. So, like, a lot of people get concerned with what happened to the markets already. Like, the war broke out, the Fed raised rates, a couple weeks ago. People are still, some people still like to think about that, but the markets, they're paying attention to what's going to happen next. And at the same time, you got to kind of look back in a sense to say, hey, what's the next catalyst that is going to come that we can see, which will be after this Saturday, Fed Williams talking about reducing the balance sheet by next month. That's likely to be the next catalyst that comes out during this Fed minutes report, right? During this readout. So that's likely to come. Now, considering the rally that we have seen, have the markets already priced that in? Have they accepted that risk and that potential fear? Like, what's a recent example? Can't really think of one, but it's basically expectations. Like, that's where when you get earnings and a company is expected to do very, very bad, markets are not pricing in, they're not expecting the stock to do very well. So when it does very well, like Snapchat, great example of their earnings, they were up like 60-70%. I expected that. We in the trading group expected that, but the markets did not expect that. But look what happened to Snapchat before its earnings. Look what happened to Snapchat right before its earnings. It was terrible. The stock was down 23.60% the day it reported earnings. So it was already pricing in a bad earnings report on the day of earnings. They reported in after hours. Next day, the stock was up 58.82%. They priced in too much bad news too quickly. Now, it works the same way for the broad markets. If they price in, like I think, too much good news too quickly, once you get bad news, it can hurt more than not, right? If we had got the Fed reducing its balance sheet down here, the markets, maybe they would have dropped to 400. Maybe they would have came down just a little bit, right? Because the markets were already expecting bad news. It was all bad during this time, or even at 409. You would have felt a little bit more, but it wouldn't have been like a continued 10% drop from these levels. Now, if we get that news Wednesday and that comes out, we could easily see the markets drop 10% in a couple week time frame. We could reverse all of these gains because the markets were not pricing it in. And that's only my speculation. That's my estimate there, that the markets are not really pricing it in. And that's where it's important to to kind of know how like pricing in works, but it's tricky because you don't always know what is priced in and what is not. That's the whole thing about it. But it's just looking at the previous action, not really like what the actual news in the past was, but the price action of the markets. Like it doesn't matter what the catalyst was 2 weeks ago. It matters what the markets did because of that and what's gonna happen in the next couple of weeks. The markets don't even care about what happened on Friday. The markets don't give a shit about that no more. They care about what's going to happen on Monday, and then once Monday is over, they care about what's going to happen on Tuesday, while also looking out the next couple of weeks, the next couple of months. Wall Street in general looks out about 3 to 6 months to look for, good or bad news. So if the outlook is really bad in the next 3 months, the markets are probably going to react less favorably to that. Whereas if you knew the markets were going to be very well 10 years from now, they don't care about that. It's too far out. They're not even pricing that in yet. That's kind of the way to look at it, but it's not like a it's not something quantifiable that you can actually like put your finger on, like this data, like this number is saying this is priced in. That's not how it works, but it's the biggest thing in my opinion when it comes down to like black swan events or figuring something a good trade the markets are not pricing in. Like in my personal opinion, I don't think the markets are pricing in the kind of revenue hits that Apple is likely to get in 2022 without all the extra stimulus money out there. Markets are like, hey, growth is going to slow down a little bit, but I don't think the markets are going to expect Apple to produce 20-30% less revenue in certain quarters comparatively to 2021. I don't think the markets are pricing that in. So I think that's going to be bearish for Apple stock. Could be wrong there, but given the stock price has almost went to all-time highs, doesn't look like the markets are pricing that in, when that is probably more probable than not. Everybody I know bought AirPods, iPads, iPhones with their stimulus money. That's an example there. Or like with the weed stocks. That's a great example too. I'm glad you point that out. I think Snapchat's the best example just because that violent, move that we've seen. I actually bought down here in the $24-25 range as well. That was probably like the best timing in the world, to be honest. But you kind of got to go with your convictions and run with it. But that's like weed stocks, like a Tilray, right? I got puts on Tilray. Because why? You ran up. You've heard buy the rumor, sell the news, right? That's all market pricing. And it's the most important thing to know. Trading, long-term investing doesn't even matter. But if you're going to trade something, you have to know how these things work, because a lot of people that don't know exactly how pricing things in works, they were like, hey, the government's going to vote on these bills. They're likely to pass, which I believe they did, if I remember correctly. And, let's just go with they did, because I believe they did. But people before that were expecting, hey, if that passes, these things are just going to fly. Whereas we were already kind of expecting them to pass. And even if they didn't or they did, people were just going to sell the news on that, because you had already seen the gain. Whereas if it had come out on a random day, the Congress has passed that, the stock would have moved similar, right? So it's all about the expectations. You can think of buy the rumor, sell the news. That's kind of a big way to look at it. Apple 180 tomorrow. Exactly. You only block someone from speaking if you can't win. Carry on with your BS. It'll only make me come for you harder. I don't know. I didn't even see a comment you put in here. What did you say? Don't block King Nomad. I didn't hear what you said. Oh, he did it. Super Show's on it. No, I didn't hear what you said, but no, I mean, I didn't hear what you said, so I can't even or see what you said, so I don't know exactly, but that would be like my yeah, that would be like my luck though. Apple straight to 180 tomorrow. I would actually like that though. Oh, changing names. Ah, I mean, dude, it's all love. I want you to make money. I want everybody else to make money. Just like saying I don't know what I'm talking about. Sure, there's people that are smarter than me, but I am not the dumbest person that, you know, people listen to. So if you want to pick that bone with anyone, it's not me, brother. I have a lot of trades to prove myself, and I don't give anyone financial advice. You can never make that claim. I've never once said to buy this now. Like buy this now influenced anyone in that direction ever. I've said, "Hey, I might personally, you know, buy these options in AMC or something else or given a strategy like a million other YouTube videos out there have done going over strategies and things like that." But I make it very clear that I'll probably lose money, and I do lose money sometimes, right? You know, but it's all love. I want everybody to make money. You know, if this isn't the place for you, you know that there's a lot of other channels out there. Oh, Chris. That's funny. I'm here for the gold nuggets, not the hater nation speech. Yes, I apologize, Vlog. You know, fuck a decision. I'll buy and trade what I want, but I love the things you say. Amen. That's perfect. That's perfect. Yeah, it's just, you know, I think one place where um the AMC retail community really lacks is broad financial education. Like these trades really don't mean anything if you don't know what is going on with the broad fundamentals of the markets. It's not just one thing that is going to cause this chain reaction that's going to cause the MOS. It's like if you didn't realize what is actually going on with like the credit situation, how everything's intertwined and what's going on with the Fed on a week to week basis, I don't see how anyone can make good financial decisions. And not everybody has all day like me to watch the news and look what's going on. You know, people have lives and jobs and families and all of that. So you know, I think that's one thing that is definitely lacking in the AMC retail group is like doing what I've been doing more so lately, like going over the catalyst, the news for the broad markets, because that will affect AMC as well. And if you're in AMC or GameStop for a squeeze trade, you know, I think that should give you a lot of comfort as well to know like, hey, the Fed is raising rates. They're going to start reducing their balance sheet. That makes interest rates go up, which makes the cost to borrow rates go up. And you can see what I'm saying reflected in the data. Like I've said this for months now, and it's finally coming to fruition. And what has happened with the cost to borrow rates? They went from 1 to 2% on the max to 6, 7, 8% for AMC stock. It's because the Fed is doing what they're doing, as well as when they start to run off the balance sheet. That is magnitudes more pressure than the Fed raising rates. It doesn't even compare. Doesn't even compare. Because how bonds work, it's a set price, right? Like a dividend stock. You get paid out 4% on a dividend stock per year. $100 stock, you get paid $4 per year as a dividend. Well, think about that the same way as a bond. If it's 4%, well, people are selling out of that bond. So it drops in price. The yield on that goes up. Now, you know, what happens when hedge funds want to borrow money, or anyone else for that matter, you or me, hedge funds, included, it goes off of those treasury yields because they're competing assets. Why would you lend money out to this guy when you could lend it out to the government and get a guaranteed return? You're going to have to charge that guaranteed return plus premium. So the hedge funds, that's killing them. That's killing them. And, the margin rates as well, which kind of go hand in hand, a little bit different depending on what hedge fund you're talking about there. But when you add all that together, cost to borrow going up, the shorts not covering, the margin rates that are about to go through the roof, especially in the next couple of months here, you get to a situation where it becomes more bullish every single day they don't cover. The stock whisper. I missed the stream. Are we going back to the 30s this week or not? I think it comes down to kind of what's going on with these catalysts. If they're this week, what it looks like as far as that is concerned. I would expect a bounce though. Things don't always go up and they don't always go down. So we're kind of just going straight down. So I would expect some bounce. I want to see how, I guess for lack of a better word, how ferocious that move back up is. Do we come up and try to retest key levels like 30, like 25, 26? How fast do we do that? If we can do that, pretty quickly intraday, or you see that volatility, like you guys will know, the FOMO is still there, and this whole short-term momentum is still very much alive. But I don't know, that's the upper end range of my price prediction. 26 is really like, I could see that happening fairly easy, as long as there's no like crazy catalyst that comes out. I wouldn't bet the farm on it, but I also wouldn't bet against it, if that makes more sense. Just tune in. What's your thoughts on Mullen? I just have a big gain in it already, so I'm not like super excited to go out and buy a lot of it. If you were trading it, I would definitely trade it with a stop loss, unless you're in it for the long term. Investor update. Mullen Automotive expects to report $68 million plus in cash and cash equivalents on March 31st. Sufficient capital for 2022 commitments, including start of the Mullen 5 EV crossover program and continued Mullen 1 EV cargo van development. So that's good. I didn't expect to have that much money though. Last I checked, it was like 40 million. Very, very attractive though. I really like it. I'm really a fan of it. That's why I hope my $5 call that I sold does not get exercised. I want to just hold the stock for a while. I like the look of the product. I'm very bougie. Looks do matter when it comes to things, especially products. I'm not a huge fan of whatever that is, but it looks good. If they can just prove some of this concept stuff to investors, and they can actually sell these fleet vehicles, it's going to be really good. It's going to be really good. But time will tell on that. The way I look at it now, if I were to buy, it's probably going to be a long-term investment or a quick trade. And, we had good momentum last week, especially towards the end of the week, but we'll see. Whenever they actually announce deliveries have started and they actually delivered something, that's when you probably get that next big move. But IEP Ortex. I forgot what I was going to do, though. What was I going to do? Earnings Whisper. Icon Enterprises. 1.61% short interest. Cost to borrow of negative 0.2. Jeez, I've never seen a negative number for the cost to borrow max. That's wild. That's actually kind of crazy. Honestly, jeez. Just doesn't look like there's a lot of activity though. That's it. Yeah, it says 0%. Am I looking at? Yeah, I think I'm looking at the right thing. Was I looking at the earnings whisper? Like my personal strategy that I like to do that let me hit the $500 into 15,000 on Facebook earnings, is buying, finding the trend, what the direction is going into earnings, and playing that trend to whatever direction it is, up or down, and then making contracts free. I think that's kind of the best way to trade earnings. But we're going to start getting more earnings that are coming out, but nothing too crazy as of right now. But Earnings Whisper is a good tool on Twitter to use. If you guys are not following them, give them a follow. I don't talk to them or nothing, but they are really good at what they do as far as earnings. Those headrest vents, I don't know. It's different. It's different. That's for sure. Is there anything interesting though? Tilray. There's the cannabis. Nova Gold on Tuesday and after hours. Tilray in the morning, pre-market. Levi's Wednesday after hours. WD-40. That's an actual interesting. I thought that was like a subsidiary to another company. WD-40 company, Thursday and after hours. What does their stock look like? WD-40? Is it like WD-40 like that? Interesting. WD-40. Huh. No shit. It's only got a $2 billion market cap though. $2.5 billion. And it pays a dividend. Wow. Learn something new every day. But yeah, Conagra Brands Thursday pre-market. That's like Slim Jim, beef jerky, stuff like that. Constellation Brands, you guys already know what that is. That's pre-market Thursday. Thursday looks to be the interesting day for earnings. Interesting stuff. Nothing too crazy though. The next couple of weeks is where it'll get good. Has literally been a money machine this year. Get one for the nanny. Yeah, they're not too bad either. They're not too bad. They're like, what were they saying? Like 50,000 or something? Like it's not too crazy. But yeah, Mullen when it hits, 70 cents or even the day before that at 50, and Super Show had called it out in the chat. It was one of those things where like the lower a stock goes, the lower your risk inevitably goes as well. As long as there is not a fundamental problem, the lower something goes, the less risky it becomes to buy it, right? As long as it's not a fundamental problem. And it can vary from different stocks or whatever. But this thing, it was beaten into the toilets at 50 cents. 70. I bought it this day. It was up 11% still, but end of the year predictions on it. Huh. Well, what do we got? We definitely got the vans that are going to be delivered. If they can even deliver vehicles and show that they are doing that, I mean, I think it's going to justify a larger valuation, especially if they do announce some kind of partnership or increased capacity. That could be very likely. I know there's been rumors and talks about that. And that could all influence the share price. But, it would take a little bit of time to go through like a fundamental deep dive on the company. What's the profit rate? How many vehicles are they getting out this year? Things like that. But, the company is at a what? Let's just go see. Easiest way to check the market cap is just on Robinhood. But actually, yeah, $683 million market cap. If this thing actually does deliver vehicles, I could see a $2 billion market cap. Now, there is going to be that risk. Hey, they're going to issue stock eventually. The markets are going to price that in to a certain extent. But you could probably go to a $2 billion market cap. What would that be? A 4x from here? A 3x from here? It's possible. Definitely not a guarantee by any means, but it's possible. Mullen, we went over the Ortex data, didn't we? But we'll just look at it again. I want to hit Yahoo Finance. I want to look to see if there's any new price targets on Mullen. And Mullen's Ortex data is on fire for a potential short squeeze too. 19.05%, cost bar max 145%, utilization of 100%, days cover 0.40. It's looking better than not. Let's see if there's any new price targets on it. Briefly, the only price target we had was like $21, $23, something like that. Yeah, I mean, Wall Street hasn't even caught on to Mullen yet. That's the thing. Like, they haven't even caught on to it. Mullen Automotive stock is a sleeper EV play that may surprise you. Mullen Automotive appears to be nothing but smoke and mirrors. Well, Mullen strengthens balance sheet. Here's why auto insiders are hoping Mullen Automotive fails. Battery technology could give Mullen Automotive the charge it needs. Pretty interesting titles of articles. They definitely like to hook you in. What's the balance sheet stuff? Yeah, that's what we just went over. How they strengthen balance sheet, though. And announced the purchase of a vehicle manufacturing facility in Tunica, Mississippi as Q2 2022 draws to a close. Mullen is expecting to report over $65 million in cash and cash equivalents on hand for continued momentum and programs development. The partnerships. Mullen's EV development portfolio includes the Mullen 5 EV crossover, the Mullen 1 EV fleet vans, and the Dragonfly sports car. That motherfucker. That thing is wild looking. If they can pull that off for a reasonable price, dude, if they can pull this off for a reasonable price, which I'm sure they can't, I could see it. I could definitely see it. Like, look at these. When are they getting it out, though? Like, look. They got this little dragonfly thing in the front. I think it's hard. I like it a lot. Like a little dragon. That's a sexy car. Okay. I can't lie. Do you see Mullen dipping soon, looking for an entry point? Thanks. I don't necessarily think there's going to be a huge drawdown in Mullen unless we get overall instability in the markets, which is probably likely to happen, honestly. So that's the only thing I could directly point to is the markets coming down and that overall sentiment pushing Mullen down. It's obviously not guaranteed, though. What's likely going to happen is that we will likely remain range bound, like in between 420 and 460. Like you're going to be remain in this range. But even more so if you wanted to narrow it, like 435 to 460. That's probably where you're going to remain for a while, I would imagine. So I don't really think there's a huge probability of like crashing at this point. The balance sheet stuff is really the only thing I could see, unless there was some kind of nuke that went off or something, or mix the two together. So as far as Mullen specifically, besides just the overall market instability, the only thing really is if they had to raise capital, and it doesn't sound like they're going to very soon, but that could change. I mean, they could do that at any time. What I would do if I didn't have a position, obviously not financial advice, but I would slowly start to scale in. So I would say, hey, depending if this is something for the long term that you're interested in, I'd say, hey, how big do I want to get this position to? How much money do I have to work with right now? Am I getting paid every week or every month or whatever? And what do I want to allocate to it? Like slowly build into it. You put $100 a week or a month into your portfolio. I would definitely invest most of it for the long term, right? Good companies. My portfolio, SoFi, Square, PayPal, what are Snapchat, Abivai. Get a little bit of a mix in there. I don't think you can go wrong doing that. Even some AMC, right? I imagine you probably have AMC already. But start to allocate some money to it. I don't really think it's going to be one of those things that just blows up in a week. But over the next year, it could do pretty well. But that's how I would get into it. Just kind of slowly buying key levels, like maybe if you fell back down to under 2, I would probably buy a little heavier. And then if you get down to like 1 again, which I don't think is going to happen at all, but if you did get down to those levels, but I would buy even more heavily. Hey, listen to Tyler. I don't know what I'm saying. No, I just be on Mullen like white on rice. If I ever get electric, it's going to be unique. Mullen makes electric sexy. Yeah, it does. I wonder how much that actually cost, though. Yeah, dude, fuck off. Look, 149,000. What? That's not bad. But what are the specs? Estimated range estimate 236 miles, 125 miles per hour, 0 to 60 in 4.6 seconds. So it's not very like competitive in that sense. Pretty standard. The range estimate. If they could get that up higher and let it go faster than 125. Let it go like 160 or 180, like a Cadillac or something. Fuckers. I don't know. I'm bougie though. I like the look of it. I like the Dragonfly too. For 149, that's actually impressive. I thought it was going to be a lot more than that. Because, I mean, it looks like a damn Lambo. Like, first glance, I'd be like, damn, is that a Lambo? What the hell? Be like, no, that's a Mullen. If I ever see a Mullen on the road, too, I'm going to freak. I'm going to freak out, for real. No, if I did see a Mullen, I would probably go buy, like, $10,000, like, ASAP. I'd be like, that's crazy. Be like, let me test drive it first. Hey, Your thoughts on Jumia? 1 to 2 years, looks beaten down after last year's run up. It's like the Amazon of Africa, right? The problem is with that is like, its biggest market would obviously be South Africa because that's the only developed country in Africa. So it's like, how big is that total addressable market? Probably pretty decent. I mean, South Africa is a pretty developed place. They do have like apartheid and all that shit still, but, well, not technically, but South Africa's crazy. You'll get like the neighborhood over here that's nice houses, and then you're living in like slums on the other side, like, you know, South America. It's kind of crazy. So, you know, how big is that actual total addressable market, and what other regions would they operate in? But it looks like it's back down to a decent level, right? You know, one of those things too, I would slowly start to put a position in it if you do believe in it. It's only got a $934 million market cap. Now, I'm sure that's a fair valuation, all things considered. But yeah, that's the only thing I would worry about, is it's going to be restricted to really like more developed countries in Africa, because some places in Africa don't even have like addresses. Like you can't ship anything there. So it's like one of those things. It's different. It's different, and I would have to do a lot more research on it to really come to a definitive. But Amazon, you know, Africa could be good considering the market cap is now so low. But I would personally watch how much money do they have? What's their cash burn rate? You know, if they're going through 200 million a quarter or a year, and they have $400 million, then you can expect to get hit with a big dilution in the next year or two, right? Stuff like that. For BBIG, yeah, it's dumb crazy. That cost to borrow is crazy, because you have that you have that spin-off dividend catalyst that is coming. Looks a Bugatti in the front, looks like an NSX. Yeah, it's crazy. I was shocked when I seen Mullen made that. What? 125? Yeah, that's what I was saying. The Amazon of Africa. Bro, African countries are developed. That's the great American lie we have been told. Honestly, that's probably true. I mean, I've just seen like pictures and stuff like that. Like, if you look up, like, just look up at like South Africa. It's bad. It's honestly like sad. It's gonna pull up. Like, look. It's terrible. Like, there's no reason for this, but it happens, right? Like, nice big houses, and then you got like shacks. Right? Like literal shacks. So it's like, how, you know, I'm sure they could use Jumia too, but what's the actual addressable market in South Africa is the question. Unlike other countries in Africa. Like, how do you ship things? I bet shipping in Africa is expensive as hell. If you gotta like, do you drive it? Africa is a pretty big continent, so you drive it. You know, you probably fly the stuff. I don't know. There would be a lot of due diligence, I feel like, for that one. It's not a simple, like, I see people use it, I think it could be good. Like Snapchat. That's something that I'm like, I see the young kids using it. I see what's going on with Facebook. They're losing users. Snapchat is growing users, right? I see people I know that are younger. They're not on Facebook at all. Rarely. They're on Snapchat 95% of the time. So it's like, I see that before Wall Street sees that, because I know younger people, I guess. Jim Cramer ain't paying attention to what, 16-year-olds are doing. I'm really not either, but when it comes to investments, I like to pay attention. Like Crocs, that was another good one. Sometimes Wall Street just doesn't get things. And Jumia could be one of those things, but that looks like some parts of Mexico. Yeah, that too. Looks like New Mexico. New Mexico looks like that. Damn. I like Tunisia. I have family that lives there. It's beautiful, but some countries are not. The move through no sis app. Yeah. Some countries, they're just, not industrialized, I guess. The world is impoverished. We're too spoiled here. We get to talk about stocks at 12 at night with 70 other people. That's true. A lot of the world is not. Like, I believe South Africa is the only developed country in Africa, and it's still not, like, good in that sense. BitNile. Yeah. BitNile's one that I really like for the longer term momentum trade, like a catalyst that is coming. The spin-off. So, like, spin-offs, you can imagine it like this. Like BitNile, when they spin off, I believe, their crypto business or another segment of their business, it doesn't even matter. But like one segment out of, okay, imagine it like this. Very simple to understand. There's 12 slices in a pizza, but let's just call it 4. So there's 4 slices in a pizza. If you guys have ever been to the hood or you lived in the hood, then or even not, I don't know. It's always going to be a little bit more expensive to buy 1 slice of pizza or 2 slices comparatively to the whole pizza. If you average it out, right, you're going to end up paying more if you bought 12 slices rather than 1 pizza. It's pretty much the same concept there. Once you break off a segment of a business, that it's more attractive, it's more of a pure play. It can be seen with a higher valuation. Like, theoretically, like BitNile, they own like hotels, their crypto mining stuff. What else do they own? They own 2 other segments of businesses as well. But let's say those 3 other segments do very bad, but the crypto business does very well. Well, it's going to be dragged down because the other 3 businesses sucked. That's not the case with them necessarily, but it's going to be a big catalyst when it happens. So I like the 2024 50-cent options. You're not paying too much of a premium. They're going to move eventually, I personally believe. But there's also a chance where it just goes to 0 and you just lose a bunch of money too. But I like it. I can imagine New Mexico. I was just telling my son how bad it is over there with all the drugs coming up from Mexico. Yeah, I think that's one of the biggest problems to society long term is all the drugs. I mean, like, there's so many overdoses in just people I've known. Like, overdoses and they died. Like, there's a couple every single year, and it's like, that's probably the same way around America. But yes, like you said, Kevin, we are we definitely got to be thankful. We definitely have it very, very well. Yeah, it was funny. It's funny. I was watching an interview that Putin was given to like ABC like years ago, and they asked him, "What's what's the thing you admire most about America?" And he said, "Well," he said, uh, he said everybody gets to have an opinion, and they get to act on that opinion. So the country has been able to become uh, very modern, uh, quickly, and like along the lines of like develop good. And I'm like, damn, yeah, like we kind of gotta, be thankful that we're in this situation. Ghana, Ivory Coast, Egypt, Morocco. Yeah, Egypt. That's one that would, came to my, uh, top of my head. Yeah, they're all. I mean, you know, I always said in America we don't have a homeless problem, we have a drug problem. Yeah, it's honestly wild. Hong Kong leader Carrie Lam says she won't seek second term in office. Go back to futures, and they they went up. Like, what is that? What it's about? Or is there some kind of notification from news? I don't know, but that's very true. Big Blue CNC. I actually have a. I guess it's not a funny story because it's not funny and it's really not a story. But I've seen um lots of poverty like that. I've seen a lot of um homeless people for drug reasons, but also for not drug reasons. Like my mom's brother, he is and mom, if you're watching this, I gotta tell the story, but it's he's he joined the military when he was young, and then he got kicked out for smoking, and then he's he was homeless ever since then. And he doesn't have a drug problem. He doesn't do any drugs. All he ever did was smoke. And I guess you could call that a drug, but it's not like it's not like you're doing anything too crazy, right? But he it was like mental issues there, and uh just very very strange. But no drugs were ever involved. Well, he had lived with us when I was younger, and the um the like this is I just got to tell this story real quick. It's totally off topic from anything else, but the night my brother was killed, he was actually living out in the garage because, well, no, he was living in the basement, and um we had all his stuff in the basement, all of that, and he didn't come out, he didn't do nothing. He kind of just ignored it, and he was like I don't know the word for it, but like ADHD, like who's there, like paranoid, right? The one time he was in my mom's room and he thought the cops were coming for him or something, so he tried to pick up the air freshener because he was smoking, and he sprayed her foundation all over the whole room. True story, crazy. Um, anyways, once that happened, he was just so like freaked out. He threw my shoes in the washer with the whole bottle of detergent. Broke the washer, broke my shoes. Broke all of the remotes in the house for like the TVs. Put cat litter in all his clothes. Did a lot of other weird shit and then just left. Haven't heard from him since. Like some people just have lots of mental, challenges. But most of it is drugs. Most of what I've seen is drugs. But he's like one of the weird outliers where it's like Something is not right. He actually got hit by a car though, and couple like 10 years ago. He got like $100,000 and blew it all in a year. Blew it in a year. I'm like, dude, didn't even have a car, nothing. Like this guy's crazy. This guy's really, really out here. But yeah, he's a douchebag, that's for sure. Douchebag tendencies. I think he left his cat too. Like, man, you couldn't even take the cat. You're crazy, dude. Yeah, we all have our stories. No, that's for sure. Got that wig cut. Yeah. Had to do it. I was gonna grow a mullet, man. Can the mullets come in style again? Oh, I'm just playing. But yeah, let's make some money. Let's make life struggles a little bit easier to cope with, you know? Tyler would know what weed stocks to get. No, I used to smoke. I don't really smoke anymore like that. I just it doesn't make me any more productive, you know. So I'm not a huge fan of it. Like I like to be focused between the years when I'm trading or doing anything else. Can cause all kinds of things. Could be drugs. Some drugs can cause schizophrenia-like symptoms. Oh yeah. His 100K and blowout. That is normal. Yeah, he's done that a couple times. He's got lump sums and done that a couple times, but I don't know. You know, like, I mean, it's bad to say, but a lot of people don't have financial literacy, and it's almost like, I don't want to say it's a good thing they don't, but if everybody did, then there wouldn't be opportunities the way that they are. That's why, like, the banks, right? They will give you 0.05% or 0.5% or 1% on your money because they're glad you don't want to invest your own money. They're glad you want to give it to the bank to get a savings interest rate. What they do, they go put it in the markets. They keep the difference. They make all the money. You don't. You know, so that's kind of one of those things where it's like it's not really encouraged to get into the markets unless you are somebody here on YouTube and you like what you do. Like, I absolutely love what I do, so I want everybody to make money. But you will never hear the bank or anyone else telling you to invest in the stock market. Very, very rarely. IO or Titan. Depends if your ADD Adderall made me sleepy. Really? Make you more productive. Oh yeah, I used to get prescribed Adderall, and it definitely made me productive. Like, you think I talk now? You think I talk a lot now? Oh, see me on Adderall. Haven't had any in years. I got prescribed it when I was young, and I was like, oh yeah. I do like some good Jose Cuervos though, every once in a while. Had some at the bowling alley. Everybody, man, I couldn't say no to a drink. They're like, I'm buying you a shot. You want to do a shot? You're doing a shot. I'm like, okay, okay. Then the next person, next person, next person. No, Sizzy. Do you guys know too? I didn't know this, but doesn't even matter to anything. But in World War II, they actually manufactured methamphetamine pills to make the soldiers fight better and fight longer. That's how they took France in 4 weeks, because motherfuckers didn't need to sleep or eat. They just popped meth pills and kept going. I wonder how much those are worth, though. Not like a street transaction, obviously, but like an auction or something. This video is totally gonna be demonetized, but I don't even care. I don't get paid for these live streams anyways. World War II. Inside the drug use that fueled Nazi Germany, known as crystal meth. I didn't know this, and I'm like a big history guy, and like World War II, I just like to learn about it, and I didn't know that. Pervitin, crystal meth. They gave it to everyone. They gave it to everyone. They were on one. Uh-huh. Like, y'all crazy. Look. Tweaking. Look, they tweaking. They're tweaking, bro. He's on that juice. Look, he's tweaking, bro. He's got lockjaw right now. Jeez. Motherfuckers cheesing. Bad joke. We will see. What is going on in the markets, baby? Heisenberg cooking that meth. Yeah. Was on Ritalin for 4 years and had an eating disorder because of it. Damn. Hiroshima after they dropped the bomb. Yeah, that's crazy. 5 answers the truth, no lie. Yeah, I used to. I mean, you know. No, I'm not going to go there, but, you know. I feel you, bro. I feel you. Looking like we are going to get that Monday bounce. I mean, yeah. That can't be why the markets are bouncing, though. Maybe. Like, was I arguing with someone on here, or I think I was having a conversation with somebody at somewhere else, but it says Hong Kong is a special administrative region of China governed under the one country, two systems framework. The country has limited election rights and a mostly separate legal and economic system. Yep. You got 2 different governments in one. Crazy, huh? Yeah, S&P a little bit positive. This is exactly what I want, though. I want the markets to fucking tear tomorrow. I want Apple to I want everything to tear, so I don't have to pay premium on any of the put options I get, because I want some put exposure. I want some downside exposure, but I don't know. I don't think Wednesday is going to be a necessarily bullish day. Good morning, y'all. East Coast time. Oh, yeah, it is, huh? Drink a monster, then fall asleep. I feel like I might see Adderall always made me like like talk, especially if you take a lot of it. It makes you talk and concentrate and all that. But I can drink a Monster like coffee and then go straight to sleep too. Like it don't really affect me like that. Like it does, but it doesn't at the same time. Like Red Bull too. Like if I drink a Red Bull, it has almost no effect on me. I don't know why. This balance sheet possible recession. It feels like many people fear the stocks we are holding. Yes. But you will work with a smile on your face. Damn. March gonna scare the market. Yeah, it's priced in to a certain extent. You know, people expect that high number, so it's really gonna have to go out of range of those expectations. Like, if the markets are expecting something and it comes in at expectations, then it's like even though it's really bad, the market's already expected it to be bad. So if the expectation's like 8%, I don't know what the actual expectation is right now. If it comes in at 9%, it was only expected at 8%. That's gonna scare the markets a lot, you know. But I think the balance sheet is a much bigger deal. Like the markets really don't care as much about raising rates because we know what to expect. The balance sheet, we don't know what to expect when you take away trillions of dollars. Last time we took away like what was that, 4 to 3, about $750 billion of assets off the balance sheet, and the stock market fell 25%. Like, what's going to happen when we take $3 trillion off the balance sheet, or 4 trillion, or 4.5 trillion? Go back to that pre-pandemic level. I don't know. It's not going to be pretty, though. Today is the MOAS. I like that. Red Bull has zero effect on me, too. Damn. Inspirado. I like the prospects of Inspirado. They have a business behind them. They're growing at a very fast rate. It's very hard to actually do any technical analysis on them because this candle is so big. You gotta like really draw out the candles here. But it's gonna be one of those things that are very volatile. If you had short-term trades on it, it's really a coin toss here. I don't believe there was any real news that came out or anything super specific, but it has fallen a lot in the last trading day. You pretty much gave away all of this gain that we've seen, and you were looking pretty damn bullish into this run up. So if the markets are green tomorrow, this thing will probably be up a decent amount. There's not too much actual technical analysis that you can really do because it just started trading publicly 2 months ago, 2 months and 2 days ago. So there's not too many trading days to actually look at, but you can look at some key indicators, right? Like the MACD was very bullish. It went very bearish. Now you're finally starting to see it break again. Historically, if it looks like this and it does finally break, it's probably a better bet than not to buy a position in it, right? RSI is at 40.96, so it's heading to the oversold side. So it's not like you're even close to getting to the overbought side. Bollinger Bands, they're going to be insane. Oh my god. Look at those fucking Bollinger Bands, dude. Lots of volatility. This is what it's telling you. Lots of volatility. But you're coming down. Like, look at the 20-day moving average. Right, a little support right there. You broke support. You came all the way back down. So once you break above that to the upside, that's when you're going to get the real runner, and that's at $10.77 per share. But you have to close above that, and you have to break above it in a meaningful way. There's not too much else to actually say, though. It is a low float company, lower volume. So when you get volume coming into it, it's going to do well, and it has a business behind it. Like it's not a terrible company. They grew cash flow 139% last year. That's a wild number. And even analysts are saying, hey, this thing maybe was sold off a little bit too hard. Definitely shouldn't have been at $100, but it definitely shouldn't be at $8 at the same time. One price target in between a buy and a hold, average price target at $12. Low price target at $10. High price target at $14. These just came in March 17th. So not too much analyst activity on it right now. That could definitely change, though. And they don't lose a huge amount of money. I mean, they lost $22 million on revenue of $234 million. So it's not like it's not all too terrible when you look at it like that. Some growth companies will just be massive losses compared to revenue too. But not any specific opinions, to be honest, for them for tomorrow. But it does look pretty bearish. Usually the time to buy. Like, the market cap's $391 million. Depending how you value it, it's pretty damn cheap. Like it says right here, revenue of $235 million exceeds guidance by $13 million, a 42% increase over prior year. Record cash flow from operations of $29 million, an increase of 148% over prior year. So actually, I was wrong in that. It's better than I even said. 2022 revenue guidance range of $350 to $360 million, exceeding their own guidance. So guiding up. So given what it's looking like right now, it doesn't look like a terrible investment, but this man got so many tabs, about to drive me insane. Yeah. CEO did sell some, but that's usually due to like the cost of living and all that. We'll see, though. We'll see. No option activity. 8.73% short interest. Cost to borrow at 248%. Kind of ridiculous. Utilization at 63.5%. And yeah, just has that really low float. So it can be very explosive. This thing moved up 680% in a day back when it de-SPAC'd. So it's one of those things where I wouldn't put too much actual time, like a huge time frame on when it has to move or anything like that. But I think it definitely will here sometime. But yeah, I'm going to get out of here. I got to go to sleep so I can wake up in the morning so we can be ready to go, baby. If you guys want to come trade with us, get inputs, get opinions, link down below in the description for that, or in the pinned comment of the last video or last two videos, or any of them really. But you guys enjoy the rest of your night, and I will see you in the next one.